see if I can move on. There we go. Fantastic. Here's the agenda for today. So the main focus of what I've tried to do here is to look at the gas market fundamentals within Hungary, and also look at how this relates to pricing on the exchanges. It's quite interesting, actually. I've seen, there is a fairly strong correlation now, it would seem, between market fundamentals and pricing within Hungary. But of course, but you're always going to have the influence of the wider European market and, other kind of major Central European, markets such as the VTP. So this was interesting for me to put together, and I hope that you find it interesting. The first thing I'm going to focus on is just looking at Hungarian demand this year, some of the drivers, and also some of the expectations for the coming winter period, and then have a look at how demand influences the spot market within Hungary. I'm then going to look at the storage picture, which of course has been, the major, I would say, or one of the kind of key drivers in terms of wider European gas prices across the summer period, and obviously heading into the winter now. Very empty storage, in most European countries, not so much in Hungary, which I will point out in this presentation. And then finally, just have a quick look at Hungarian cross-border flows. I appreciate that, a lot of the gas coming into Hungary is tied to long-term contracts, and I'll touch on that briefly. But it's also interesting to see some of the changes, particularly on the Romanian and Croatian borders as well. And I'll try and unpick, some of the factors affecting those. So first thing to do is to kick off looking at natural gas demand in Hungary. The graph that I put here on the right is just comparing gas demand in Hungary for most of the year so far to Austria and the Czech Republic. So far in 2021, well, up until kind of the end of September, Hungarian gas demand averaged around 27 million cubic meters per day. As you can see there, just over, or sort of just under 13% more than the average over the previous 5 years. So some healthy growth in terms of gas demand in Hungary, although kind of arguably, I would say a lot of that is to do with, temperatures, as has been the case in most of Europe. Hungary also this year has used more gas than Austria. You can see the figures there, and the Czech Republic. So within that three-country area, Hungary has been the largest consumer of natural gas. And of course, the peak demand came in the first quarter of the year, where we saw the average increase to about 45 MCM a day. As I mentioned, that was largely temperature driven. Just have a quick look at this here. Here we are. So yeah, as I said, domestic offtake remains kind of the main driver of Hungarian gas demand. And just, if we can sort of set the tone for what's been happening in the spot market, and also looking at, some of the winter prices, which have obviously just expired, it all goes back to this early part of the year. So I appreciate that this graph is quite busy, but the grey bars here are just showing domestic demand in Hungary this year, as opposed to the purple bars, which are showing the average over the past 3 years. So we can see, quite a spike, especially in February and early March, very low temperatures in Hungary, as there were throughout Europe, and that led to, a big increase in terms of kind of domestic offtake compared to what we usually see. Then, of course, the other thing which has been, one of the kind of major drivers to the bullishness that we've seen in the market, throughout the summer period and now into this winter. At the start of the summer period, so early on in the second quarter in April, we saw cold temperatures basically continuing through most of Europe, and relatively elevated domestic gas demand in Hungary, and as I say, kind of throughout, European markets. And obviously, in Hungary, not so much a problem in terms of storage injection, but for a lot of European markets, they entered the second quarter with relatively empty, storage, and obviously in the kind of early parts of the summer period, domestic demand was still very high, and there wasn't really much kind of available gas to start injections early, and arguably, that's had a big knock-on effect for prices for the rest of the year. The last point I want to touch on, so these two lines are just looking at offtake from the industrial and power sector in Hungary, comparing kind of this year, the blue line compared to the 3-year average, the sort of light grey line here. Now, an interesting point to note, kind of earlier this year or throughout much of the year, we've seen industrial and power offtake kind of quite far above, where we saw over the previous 3-year average. At the start of the year, gas prices kind of relatively cheap, and so obviously gas in the money for power generation. But we're starting to see offtake from that sector tail off, and I think this is an interesting trend to watch throughout Europe. Because gas prices have been so high, we're starting to see, a bit of a switch back from gas to coal in some markets, a bit more coal-fired generation, despite the fact that, coal prices are relatively high, as are carbon. And of course, industrial offtake has also declined as well, particularly in the fertilizer section. We're hearing a lot of fertilizer producers are unable to break even at the current gas prices, so they're reducing their nominations. I think in the overall scale of kind of European gas demand, because, temperatures and the weather is such a big driver of winter pricing, even if we see kind of large, coal to gas switching in Europe over the winter period, and also a kind of, less offtake from the industrial sector, still expect prices to remain fairly high, over the coming months. And I think temperature is going to be the key factor that could swing things for us. Kind of slightly off topic, but, our analysts have looked at this, sort of European-wide, and they're estimating, because of the high gas prices at the moment, they think that offtake from power stations next year could be sort of between 20 and 40% lower in 2022 than it was in 2021. So kind of massive shift there, especially in countries such as Germany, where there still is quite a large capacity to switch from gas back to coal-fired generation. As I say, in terms of pricing, perhaps the impact won't be too enormous in the short term. I think temperatures are going to be the thing to watch, but it is interesting to see, coal-fired power plants coming back into the money in several European markets. Now, I just want to look at, the correlation between Hungarian gas demand and spot pricing on the CEEGEX market. So what I've just done here is looked at Hungarian gas demand, these are the green bars, and kind of graph that against the spot prices or the spot indices that we've been seeing on CEEGEX. So if we look over here, kind of early part of January, we have this spike in terms of Hungarian demand. As I say, a lot of that kind of correlating with low temperatures. And as you can see, a fairly tight correlation between spot prices there. As demand was increasing, so too were prices on the CEEGEX exchange, as you would expect. So, I would say, a fairly tight correlation between kind of market fundamentals and pricing. In the latter part of January, I would say this breaks down a little bit. So if we look at the lines, there was a big drop down in terms of spot prices over the kind of second half of January compared to the start of the month, whereas sort of demand remained relatively high. And as I'll show in the next slide, I would say even though we're seeing, a fairly tight correlation between demand and spot pricing in Hungary, we also have to factor in moves in kind of neighbouring markets, and of course, the benchmark TTF as well, which we see as also, a key driver to Hungarian prices. If we look at February, on the right-hand side here, though, fairly tight correlation again. In the early part of the month, we see, demand rising and spot prices kind of moving up in tandem. And then also in the latter part of February, we can see demand coming down in Hungary, slightly kind of warmer temperatures in the sort of late part of February before we have that cold snap in March. And as we can see here, we get Hungarian spot prices moving down in tandem with that. And now what I just wanted to look at are correlations between Hungarian spot prices and other European hubs. What I've graphed up here is just, again, looking at the CEEGEX within day and day-ahead indices and kind of comparing that to the ICIS indices for the VTP, the Austrian day-ahead, and also the TTF day-ahead price in the purple there. So we can see, fairly strong correlation across the winter. And I suppose, this is what we see, within the wider European context. All of these markets don't operate in isolation. We tend to see, when the TTF moves, it tends to pull other kind of contracts with it. Obviously, the TTF's the main benchmark for Europe. Of course, within Central Europe, you could argue that VTP is also an extremely important market. Austria, kind of one of the benchmarks for the region. And again, we can see this fairly tight correlation between CEEGEX spot prices and the VTP as well. You can see the correlations obviously particularly strong in January. As I mentioned in the last slide, Hungarian gas demand kind of kept rising in the second part of January, but spot prices came down. You can see here, why that was. It's really the drivers from other kind of more liquid European markets which were influencing Hungarian gas prices here. But, in terms of kind of liquidity and trading, it's kind of really good for the market that we see these correlations. Obviously for traders, if you want to get a sense of how things are moving, you need a more liquid market to do that. And the fact that Hungarian spot prices are kind of increasingly correlated to the wider European market, this does make trading opportunities easier and obviously kind of reduce the risks. But also kind of good to point out here, you can see there are at times a disconnect as well, which just shows that, in periods where we see different local fundamentals in Hungary, we see a disconnect between that blue line there, the CEEGEX within day price, and as I mentioned, those VTP and day ahead indices. Now I just want to move on to talk about storage. As I say, this has been kind of one of the, the main drivers of gas prices throughout the summer, sort of throughout Europe. Interestingly, we've seen a big change in kind of spreads between, Central European markets and Northwest Europe. And that's because actually, storage fullness in Central Europe has been a lot better than we've seen elsewhere, particularly Germany and the Netherlands, where, stocks are still fairly low compared to where we normally see them at this time of year. Hungary has a relatively high storage capacity, about 5 BCM of commercial storage capacity available. And as you can see there, about 1.5 BCM more reserved for security of supply. What I've graphed up here is just storage fullness as a percentage. You can see Hungary in the blue line here, didn't kind of suffer as much as a lot of the other European markets. So the red line here is showing the Netherlands. And you can also see, sorry, I appreciate the Austrian line and the European average lines are kind of not so clear here. But basically what we saw heading into October, Hungarian storage sites, around about 80% full. This compared to a European average of about 70%. So, Hungary in a kind of much better position to manage, spikes in winter demand than some of the other European markets. And especially, as I said, for TTF and Germany, storage sort of just over 60% full as we headed into October. And this has had a bit of an influence on spreads between Hungary and some of those other markets. So this is just kind of looking at, the front winter spread or the front winter Hungarian price in blue, which I've taken from the HUDEX data. And then also looking at, the same, the forward TTF winter and the forward VTP winter. And I've graphed this up against storage fullness. So these are the bars. So if we look at Hungarian storage, these are the purple bars. You can see much fuller sites than we've seen in Austria and the Netherlands over the summer. Those other countries do start to catch up towards, the kind of end of September. But Hungarian storage much fuller, as I mentioned before. Now, if we look to the early part of the summer on the left-hand side here, or if we look to kind of, August pricing, we can see that, the Hungarian winter contract still at a slight premium to the TTF and the VTP, despite the fact that you should argue that, less risk in the Hungarian market because of the storage picture. But then as we move into kind of later August and into September, what we've seen is the Hungarian forward winter price started trading below the VTP and the TTF. And again, I would say this is, what we're seeing here is Hungarian forward prices starting to give, a better reflection of local market fundamentals, i.e. because storage is so much fuller in Hungary than it is in, for example, Austria and the Netherlands, we start to see the Hungarian winter price moving below those markets because, there's less risk on the supply side. Any demand spike, storage should be able to cope a lot better in Hungary than, for example, Austria or the Netherlands, where sites are that much emptier. Kind of going forward, throughout this quarter, I think a big driver of prices for the early part of next year is going to be the ability of, shippers to fill sites in other markets. And it'd be interesting to see how, that develops over the next couple of months, whether or not, particularly the Netherlands and Germany, whether or not, sites can kind of move closer to the average fullness. If not, then we're looking at a fairly tight picture for the first quarter next year. And I think, the bullishness in gas prices and the gas market kind of likely to continue. Now, just to look at, the quarterly spreads for the winter period. So here I'm just trying to focus on, the Q4 21 contract, which is now obviously expired, and also the Q1. What we saw over the summer period, because storage was so empty across Europe, we saw a reversal in the usual relationship between the Q4 and the Q1 contracts. So basically, we saw Q4 21 trading at a premium to the Q1 22 contract because of the expectation that, storage injections would carry on throughout the fourth quarter. But then as the summer kind of progressed, what we saw is, a kind of shift in that relationship in most markets. So loads of risk going into the first quarter contract because people are thinking, well, hold on a second, Q1 is the highest demand period in the winter. And obviously, if sites are relatively empty as we kind of come into the new year, then, Q1 things could look very, very tight. In contrast, in Hungary, you can see the blue line here, just looking at the Q4, Q1 spread. Much wider than, for example, Austria, as we can see there. So basically, this is, I think, a reflection of the fact that, there's a lot less risk on the Hungarian Q1 22 contract than there is, elsewhere in Europe, for example, in Austria. And as I say, that is a reflection of the fact that storage fullness, kind of a lot higher in Hungary than it is in Austria and a lot of the Northern European markets. Now I just want to talk about Hungarian border flows and locational spreads. As I mentioned earlier, obviously a lot of the kind of border flows into Hungary is of course driven by, long-term Russian gas supply. But I think there are some interesting, shifts as well. I suppose just kind of as a general point, everybody knows we've been seeing a lot less gas coming through Ukraine and into Hungary and into Central Europe. And kind of a lot of markets, exporting to Ukraine at times to make up for the shortfalls there. As a result of this, we've seen Russian gas start to come into Hungary more on the Austrian border, which of course coincides with, the latest deal that's been signed, for long-term supply from Gazprom. The other couple of points that I want to mention that I think are quite interesting is that this year we've seen a reversal in terms of flows on the Hungarian-Romanian border, and I think there's a case to say that that is, being driven by prices. It's quite interesting to look at that. Although, price transparency in Romania still isn't fantastic, I think there's still some evidence to show that, that shift in flows between Hungary and Romania has been driven by pricing. The other interesting one to mention is Croatia, and what we're seeing is a very kind of direct correlation between the amount of gas flowing between Hungary and Croatia and the actual supply coming out of the LNG terminal Kirk that's kind of newly come online in Croatia. So that's a bit of an interesting shift, I think, in terms of kind of regional Central European dynamics. So have a quick look at Austria and also have a look at pricing as well. So in fact, actually this year, what we've seen is that in terms of the day ahead and in terms of the spot market, we're actually seeing, Hungary tends to be the cheaper the two markets there. So if you look at the kind of green line here, fairly volatile spread. But what we see for a lot of the year is that actually prices delivering on the spot market in Hungary have been much lower than we've seen in Austria. And I would argue that that is a result of Austria kind of having much more influence from Germany, which of course has been affected by particularly a kind of empty storage. But if we look at the kind of front month spreads, this is the red line here. So all I've done here is just kind of graphed the end of month CEEGEX VTP front month spread. But basically we see Hungarian monthly prices at quite a strong premium to Austria, whereas, as I say, on the spot market, we tend to see Hungary as the cheaper market, which is quite interesting in itself. But yeah, to kind of put things into perspective, Hungary, it's been importing gas from Austria at a rate of just under 4 MCM a day. Although, as you can see, the blue bars here, obviously that the amount of gas flowing is relatively volatile. That equates to a rate of just under 1.4 BCM per year. Obviously, as I mentioned, deal signed with Gazprom in late September indicates Hungary set to receive about 1 BCM a year of Russian gas via Austria. And then we've got another 3.5 BCM coming from Serbia via the Turk Stream pipeline. So obviously, this is kind of all part of a sort of well-known Gazprom strategy, reducing flows through Ukraine. It'd be interesting to see how that, affects regional dynamics. There's obviously a big shift away from Ukrainian transit and also, towards Russia using these other lines, Nord Stream obviously in particular, and also Turk Stream through the south. And as I mentioned, those kind of last points, Hungarian spot prices been below the VTP, but the front month we've actually seen Hungary at a premium. As I say, a lot of the gas coming in from Austria is kind of driven by those long-term contracts, but it is interesting to see the volatility on the border there. Now, just to as a kind of conclude things, to move on to the Romanian market. Now, it's quite difficult to get pricing data from Romania. Most of the liquidity is kind of dealt via non-standard contracts and a lot of kind of trade going on off screen, although there have been some shifts in Romania. I would say that in Hungary, the kind of transparency has been a lot better in terms of kind of CEEGEX and HUDEX. It will be interesting to see how things develop in Romania. At ICIS, we've seen this as having the potential to be a relatively large market for a few years now. But there's been quite a problem in terms of sort of local regulations that have been distorting the market. And also as well, as a side point here, I think a lot of the gas fields that we expected to see developed in Romania in the Black Sea really haven't come online, and we've seen a lot of the investors pull out of the market there. If you think companies like ExxonMobil putting their investments on hold, and that's been as a result of kind of local taxes and things that have been going on in Romania, which have made it difficult for people to make that final investment decision to produce more gas coming from Romania. But despite that, this year we've seen basically a switch. Last year, in general, we saw Hungary as a kind of exporter to Romania, but that started to shift in 2021. What I've graphed up here are the blue, sort of the green lines here, or the green bars. They're just showing, monthly flows between Hungary and Romania. So you could see at times, Hungary, some months importing as much as 140 MCM from Romania. As I say, quite a big shift considering Hungary was a net exporter to Romania the previous year. As part of our research at ICIS, we've been producing, not for publication, this is just one of my colleagues doing some research into the Romanian market. We've been producing a weekly month-ahead assessment for Romania as part of our kind of look into whether or not it would be sort of worth trying to produce a number for that market. What I've done is I've just graphed up, for where we've made an assessment for Romania, I've graphed this in the blue line here against the CEEGEX prices for Hungary on the front month basis. And so basically we can see, throughout most of the year, Hungary has been trading at a premium to Romania on a front month basis. only a couple of times there we see, the price dip below 0, which indicates Hungary at a discount. And interestingly, as we see, if you look to the right-hand side of this graph, towards the end of September, that spread really blows out. So, big Hungarian premium on the October contract to what we were hearing for prices in Romania for that month. So, expect to see a lot more Romanian gas coming into the Hungarian market for October. And you can see, final point there, last year, Hungary delivered just over 1 BCM towards Romania. This year, we're seeing net imports, Hungary from Romania. So quite an interesting shift in dynamic there. And the final point that I wanted to make before I wrap things up is just looking at the influence of the KELER LNG terminal in Croatia. So here what I've done is just graphed up Hungarian exports to Croatia against actual supply out of that terminal. So this is not imports of LNG, this is actual gas coming out of the terminal and into the grid in Croatia. And you can see, there's an extremely strong correlation here. Every time we see, a jump in supply out of that terminal into the Croatian grid, Hungarian exports, drop off very sharply. And of course, vice versa as well. Whenever we see no supply from the LNG terminal, we see a kind of big increase in Hungarian exports. At the moment, it doesn't look like it's profitable for Hungarian shippers to bring gas from Croatia into Hungary, from that LNG terminal, because the capacity charges on the border mean that it's not really profitable to do that at the moment. It'll be interesting to see if there's any revision to those charges in future, because obviously, if we think about supply diversification in the region, having access to an LNG terminal could be, a great thing to support liquidity in the Hungarian market and sort of more widely. Of course, there's also, the Polish LNG terminal as well, which I haven't mentioned, which, could also be a sort of way of Central European accessing, gas from LNG. Again, slightly difficult circumstances in the Polish market as well, which have made it quite difficult for kind of non-Polish companies to trade gas there and to actually access the market. The EU has been pushing for a liberalisation of conditions there, in particular around the storage rules that are in place in Poland. So it'll be interesting to see, if that gains any traction and whether or not we can start seeing, more LNG come into the Central European market. But I do think it's quite interesting to show, there is a clear correlation between the amount of supply from LNG in Croatia and kind of the border points in terms of, the Hungarian, border flows in terms of, those two markets. And that's everything that I wanted to focus on today. I hope this was interesting. As I say, for me, kind of my focus tends to be on kind of Northwest European markets. So it's quite a challenge for me putting this together. But I did find it interesting to look at, the kind of regional dynamics. And it's very positive to sort of know that, we're seeing a very strong link between fundamentals within Hungary and the prices, and also, strong correlations between the wider European markets. All of my contact details are there, so if anybody wants to follow this up with any questions, I'll be very happy to take them. Thank you very much for this today. Thanks.